All right, welcome to this week's breakout and breakdown watch list from October 17th to the 21st. With the market being in a very strong downtrend, there aren't many quality setups on the long side. So in today's video, instead of doing 10 long setups, I'll be doing 5 long setups and 5 short setups. If you're coming here for a specific setup, there's going to be timestamps in the comment section below. Here are the 10 setups that we'll be covering today. We'll start with the 5 long setups and then go to the short setups in the second half of the video. And typically for these videos, I use MarketSmith, but they're down for maintenance this weekend, so we're using the E-Trade platform. The first setup that we'll cover is ACLX. This is a biotech stock, and it does trade fairly lightly, about 300,000 shares a day. So definitely not one that you could put half your account in, anything like that, but one that is setting up really well. Earlier on in this year, this had a rally of about 300% from the low to the high here, and then corrected about 50% coming through the 8 and the 21 EMAs. From there, a very deep correction like that, it does typically take more than a couple of weeks to really set up, and that's exactly what we're getting recently here. We've had a couple pullbacks, first one 20%, second one 16%, and now trending above the 8, 21 EMAs and the 50-day moving average, along with the volume shelf right there. So with this, we're looking for a break over $20 as a potential entry point and keep our stop loss either below Friday's low or below Thursday's low. That would get us around the 8 and 21 EMAs as well for ACLX. One theme that I noticed while going through my weekend routine is that the coal stocks were setting up. So we got 2 of those for you today, AMR and CEIX. We'll start with AMR here. Zooming out, you can see that this has had a really strong 2022. First half of the year, rallied 240% or so. From there, we definitely went through a congested period, kind of pulled back 44%. From there, second wave, pullback 33%. And now we're trending above the 8, the 21, 50-day moving average, and this volume shelf to the right, similar to ACLX. So with this, we're looking for a break over 255 as a potential entry point, and then a stop under Friday's low there. You can see the price relativity compared to the QQQs is in a very strong uptrend. If we're going to outperform the market, we need to be buying stocks that are outperforming the market. And I wanted to point out, even on Friday, when the market was down about 2%, this was only down 1%, closed in the upper half of the daily range, and it did so on less than average volume. So this is AMR. The next long setup that we'll cover is CEIX. This had about a 40% move from low to high here, including an earnings pop on above average volume right there. From there, it pulled back into the 8-day EMA, and this could have been a trade, but that's only about 6%. After about a 40% move here, I wanted to give it more time to set up. So I've been monitoring the stock for a while, but haven't actually taken any trades. Last week on Tuesday would have been a potential entry point, but as we got more sell-offs later on in the week, this came back to the 50-day moving average. On Thursday, when the market gapped down, this also gapped down below the 50-day moving average, but very quickly recaptured that, closed near the high of the day, back above the 8 and 21 EMAs as well. And then on Friday, when the market was down 2%, this was down 1%, so a little bit of relative strength there as well, closing just above the 50-day moving average on less volume than Thursday. So as this continues to tighten up, another 3 days or so where it puts in really tight daily bars would improve the setup drastically. But we're looking at this point for a break over Friday's high of 69.71 as a potential entry point. But again, a couple more days tightening up would get us a lower entry point around $69. That would be ideal. The next stock that we have is CEIX. This is the other coal stock, and similar to AMR, had a sell-off in January, and then from that February bottom has run up about 300%, a few times cutting through the 50-day moving average, but for the most part, in a nice uptrending market. We did undercut the 50-day in September, bounced back through all those key moving averages in October, and now is just starting to tighten up here. A couple more days of tightening action between the highs and lows of Friday would be ideal, but we're looking for a break over Friday's high, 70.68, call it 70.70 as a potential entry point. Or if we do get some tightening days, then we can use just a downtrend line break through that area. It doesn't have to be perfect as a potential entry point, and then keep our stop ideally lower than the 50-day moving average for CEIX. The last stock that we'll cover on the long side is TDW. This is an oil and gas stock. Many of those stocks on the oil and gas side are setting up as well, so you can pick from whichever you like the best. I chose this because it did close above all the key moving averages. You can see kind of a VCP pattern to it, where the first pullback is about 40%, second pullback high to low, doesn't have to be perfect here, 25%. Third one, high to low, about 10%. And now if we can get a couple more days where this pulls back into the 21 EMA, we're about like 5% pullback, that would be perfect action. So we can be patient, we can wait for that. But on Friday, higher highs, higher lows, not very common in the market. Relative strength has been just off the charts compared to QQQs. So with this, looking for a break over Friday's high, 24.50. But again, a couple more pulled back days to tighten up the range would be ideal for TDW. Now we're on to the short setups. The first one is Airbnb, and everything with the short setup, we're just looking for the opposite as a potential long setup. So we want the price to be under key moving averages. We want to be seeing heavy volume selling versus low volume rallying, and under some volume profiles or near breaking under the volume profiles. So with Airbnb, you have it under the 200-day moving average. Recently, it was showing a bit of relative strength in September, but then you could see heavy volume selling through all those key moving averages. Once again, put in kind of a little base here and attempted to rally on Friday back over the 50-day, but it could not do that with the market pressure. This was down 3%, breaking back through the 50, the 8 and 21 EMAs. With this, you do kind of get the shorts shaken out, the people that shorted down here shaken out, because it did punch over the 50-day moving average. And then we close at the low. So we shake out the shorts and then it sets up again on the short side. So with this, looking for a break under the low on Friday. That low is 109.01. And then I would probably have a split stop here, a little bit at 111 and then a little bit higher, maybe above Thursday's high at 113 there for Airbnb. Next short opportunity is Robinhood, HOOD. Really got to zoom in here and I'll bring the chart up. But basically this has been basing out since, when did it put in the low? Put in the low around June. We have been putting in higher highs, higher lows through here till we get to the 200-day moving average. And that got rejected once, twice, 3 times last week. And we did get this bearish engulfing candle on Friday. Heavier volume the last couple days versus the one rally day that we had on Wednesday with the stock. And what we're looking for here, or what we're seeing here, is we get resistance right at the 200-day and then sell off through the 8, the 21, and the 50-day, close right near the low of the day on pretty heavy volume. And with this, just breaking under Friday's low is that potential entry point on the short side. That low is 988. If we can get a quick burst and the trade is working in our favor, I'll probably put a stop loss on the upside just above 10 to manage my downside upside risk on the stock kind of railing back through. So that's Robinhood, potential short. Next we have the rideshare app LYFT. You can see big gap down, major downtrend under the 200-day, under the 50, the 21, and the 8. Recently, we kind of had a check back to the 8-day EMA last week, but got rejected right at that area and closed near the low of the day on Friday. This is one where if it can continue drifting up to the 21 EMA, maybe not this week, but next week, it actually improves the setup as a potential short. But still one that we had this weak rally to the 8-day EMA, and now putting in this bear flag here for LYFT. The final individual stock that we'll cover on the short end is Roblox, RBLX. Zooming out, you can see under the 200, under the 50, and then it has been trading around the 8 and 21 EMAs recently. And this has had a couple of larger volume up days. So that's one thing that's making me more cautious about shorting this. I probably wouldn't pick this individual one, but it's one that is setting up. Had a really nice day last Wednesday, up 7% while the indexes were down about 1%. Rallied through on Thursday when we got that oversold bounce in the market, but then on Friday attempted to come up to this pivot and then got rejected, closed right at the low of the day, but did so on lighter volume. This is one where we're just looking for a break under the low on Friday as a potential entry point, but because it is showing some type of volume accumulation, I would try and trade this quicker. So if it's down 5%, down 10%, take my profits on it. Just because there is some signs of life on this, but it could just roll over after putting up a little bit of a fight here. Still under all the key moving averages, still in a downtrend, still a stock that I wouldn't want to own long, but one that I would want to take some profits quicker on the short end for Roblox. And if you don't like shorting individual stocks, there's always ETFs like ARKK. This is basically just a basket of stocks in stage 4 downtrends, which make for a great short opportunity. You could zoom out, had a great 2020, very turbulent 2021 as it was in its stage 3 topping process. And then basically from the start of this year has been in the stage 4 decline. Put in that low in June and had a pretty nice rally, about 48%, but that will happen with stocks in stage 4 downtrends. You'll have these rallies back up, but you'll just be rallying into more overhead resistance, more selling pressure, and that's exactly what we got here. Got a 1 wave, 2 wave, working on the 3rd wave down, and closed at a new low on Friday. This is one where if the market rallies Monday, Tuesday, maybe even Wednesday, kind of back into these moving averages, back into the area that it saw resistance, well, support first and then resistance on Friday, that would be a great short opportunity up higher. Or if the market just collapses come Monday, breaking under the low, you just got to be a little bit careful shorting in the hole. The markets are already at new lows or right around new lows on Friday. So just like we don't want to be buying stocks extended to the upside, we don't want to be shorting stocks like too far extended to the downside. Now, this did just touch the 8-day EMA, so it's not extended to the downside yet, but ideally we get a couple week volume days where we rally back to that 8-day EMA and then get a lower risk entry point for ARKK short. All right, that's gonna be the breakout and breakdown watch list for the upcoming week. If you guys enjoyed the video, please leave a like and subscribe to my channel. I make this watch list video every weekend along with other trading related videos. And finally, if you wanna hear more from me throughout the week, you can follow me on Twitter, it's @NickDrendel there, and on all the other social media sites, it's @Nick_Drendel. Have a great week and I'll see you guys in the next video.